Okay, guys, so for this one, I'm just gonna do a review of last week's trades, which is from the 24th to the 28th. Yeah, this is what we are looking at now, right now, from the 24th to the 28th. Just gonna review these trades. So, the first one, we hit TP, as you can see. So, how did we get here? Um, this is what happened on the 24th. Okay, let me not go back that far. So earlier on at 2:30, I was looking at this. Well, it's not really an uptrend. I was just posting here. But as you can see, the market was pushing down from the upside. We broke out of this um rising channel on the 1 hour. We broke out. We caught this 300 points breakout. As you know, the market likes to break, correct, then continue to impulse in that direction. So this was the 24th on Monday, and I identified what looked like a trend. So at 3:30, I sent out. No, it was at 2:30. I don't think I shared this actually because I believe I was trading this on my own, and I could tell that nah, here I'm just posting. So as you can see, I identified that we are still in a downtrend here actually. So this smaller trend was within a big trend, which was a downtrend. So I saw that the market was more likely to sell. So 20 to 3, I identified this. That's when I saw that now the market is actually gonna come back to this level and then push further to the downside. And that's exactly what the market did. As you can see, we hit TP, right? Took a screenshot of a few of my trades there. We hit TP. So that was Monday, the 24th. Then Tuesday, the 25th, we also hit TP. I remember here around 6 o'clock, or was it 4 to 6? I was in load shedding. Yeah. So as you can see, I identified this uptrend here. I identified this uptrend here that okay. So within the bigger downtrend, we are now within a smaller uptrend. Now this is clearly an uptrend because we can see higher lows, right? We can see higher lows. Unlike from the previous setup on Monday. These lows are higher, but they are actually on the same level. Some of these they are not that far apart. So I could tell that this was not an uptrend. This is clearly an uptrend here. So I was able to now link the two within our downtrend, major downtrend. You see this dotted line, that's the center line, right? That is like more of an average where the market tends to turn. So we broke this level, and I could tell that okay, we have this common area here with this rectangular shape, and I could tell that the market is just gonna come and touch on the support of the rising channel, and it's also gonna touch on this center line of the descending channel. So that's what we did. We hit it. So as you can see, between 3 and 6 o'clock, I was not available to take more screenshots. But as you can see, we did exactly that. I hope you can see that the picture is not manipulated anyhow. And I also shared the signal, by the way. So for those of you who have the strategy but you are not in the signal group, um, I shared the signal in the signal group. As you can see, we hit TP. It even broke to the upside further. And instead of turning at this level, we actually continued. The market just kept on pushing. Let me see. Yeah, the market just kept on pushing. So that was Tuesday. Wednesday, the 26th, right? Yeah, so as you can see, the market did not turn exactly uh, below the resistance of the descending channel. It went above, but then went back in. And then, as you can see, we had this downtrend. As you can see, on Wednesday, we also hit TP. Now, something funny happened on this day. Let me just, let me just, yeah. So as you can see, around 3 o'clock, I identified this declining channel, right? So I could tell that okay, the market maybe will push to the upside, and we are below the moving average, as you can see. So we are more likely to keep pushing to the downside because we've just broken the moving average, and we are below this overall resistance level at 15,531, as you can see. So I sent out a limit order, so it was a sell limit signal. As you can see, the market did push to the upside, take us in, and pushed. Now, instead of the market breaking the descending channel, we actually bounced back up. So I went down to the 5 minute to identify actually what was happening. So I could tell that okay, the market is still well. There's a support here, as you can see, with this rectangular shape, and the support. There's also the support of the descending channel. So on the 5 minute, the market bounced back on that. Now the funny thing is, the market actually went back to our, as you can see, the previous 15-minute candle closed close to our entry level. So some of the clients in the signals group moved their stop loss to break even, and unfortunately now they got stopped out. But the market actually went on to go and hit TP. As you can see, the market went on to hit TP after uh, that whole scenario there. So these are some of the things that you have to look out for in when trading Nasdaq. Is that Nasdaq does respect breakouts, impulse correction, those kinds of patterns. Nasdaq does respect them, but what you need to know is that Nasdaq moves fast, so you can see it shooting down within a few minutes, and then all of a sudden it goes back up. As you can see, it spiked to the downside on the first 5 minute candle, and on the following 5 minute candles, it just pushed back up to the entry level. And this usually happens when there's a lot of volume in the market. A lot of people see that the market is pushing back up, so they close their positions, which means the price goes higher and higher. But if you have been trading, uh, if you have been trading using your descending channels, ascending channels, moving averages, when you have it in your psychology that okay, the market will always respect certain conditions, which is, as you can see, the market, even on the 5 minute, the price is below the moving average. We are in a descending channel, so the trend is more powerful than what is happening in the meantime. So if you have identified your trend, you are safe. You know that okay, the market will actually still continue to the downside. And then we try to trade the form C. Now I thought that because we are within a bigger descending channel, and we are also within a smaller descending channel, I saw this as a potential sell because we are also below the moving average. But unfortunately, as you will see, Form C was it played around. It did take us in and then pushed to the downside a little. Then boom, at half past eight, that's when we saw the real move. And after getting stopped out, I just got out. As you can see, I don't have any other screenshots. So Form C was a fail. And then the 27th, this bigger trade here, this trade here, I had problems with internet and electricity. So during the day, I was able to identify this. I think this was about 4 o'clock. I had electricity at that time. At half past three, I did not have electricity, and the market actually pushed up at half past three. Let me show you here. As you can see, at half past three, this is the candle that we experienced here. Let me use the clips. So this is half past three, as you can see. The market pushed, but then as I gained back my internet connectivity, I was able to come back and see, okay, we are at a fairly strong, uh, what can I call this? A supply area. This is where a lot of liquidity is at. As you can see, after that market touched this area, it pushed. Uh, that's when we got this 300 points previously. So I saw that we are back at this level and we got there very quickly. So the market is definitely not gonna just keep on going up like that, right? So I saw that okay, this is a great area to enter. So that's how I caught this, but I was unable to share it in the signals group because of my problems here. And as you can see, it was a very successful trade, and I felt bad for being unable to share this trade. Now Friday, is that previous? Yeah, on Friday we were at this level below 15,600, 15,600, and I thought, okay, maybe this is a strong resistance. As you can see here, it was a strong resistance support nyana here, and now there's something that I actually did on the 1 hour, but is there a screenshot? Yeah, as you can see on the 1 hour, I identified that okay, we are gonna be actually completing a head and shoulder pattern. But what I failed to identify was there this level 15,424 was actually a stronger support than uh, uh, it wasn't as weak as I thought it was. So as you can see, I thought that we are gonna push further to the 200s below 300, as you can see, but nana, that's not what happened. The market actually used this area as support. Push from the upside, we pushed to the downside, and then we played around the moving average. And at this area, it was early in the morning at 11. So I was just waiting for half past three to see what is actually gonna happen. I even used my Fibonacci there. I usually don't use these tools, but on this day I did. Now, something that I also wanna remind you guys is that the zero point 0.5 level, if you are waiting for the market to to as you can see, it's a break, obviously, then you expect the market to come and retest to push further to the downside. Now, the 0 point level, if it gets broken, guys, that's probably a great signal for a buy. It shows that the market is not actually retesting, it's pushing back up where it came from. So, but I was unable to share this because of load shedding again. So the market did push to this level 600, which is the 0 0.5. As I saw it at this level, I thought, okay, this is a great time to sell. Now, As you can see, this is the last screenshot I took, and it was at 13:23. That means at 2 o'clock until 4, I did not have electricity. So I was unable to share the half past 3 signal. So this is the last signal that I was able to share. But what I what I would have identified at half past 3, uh, maybe I can move this. As like as you can see here, let me just use my tools to show you guys something actually. How this area would have this area would have been easy to identify because of this candle here. Um, Usually, what happens with liquidity in the market is that it leaves clues. The market will leave clues. It shows that, as you can see, we were in a strong sell. Then this is the level where buyers got in. That's why we got this doji, as you can see here. That candle is a clue that if the market gets back to this area, there will definitely be buyers, because that's what happened at this level when we were pushing to the downside. There were buyers here who were ready to fight the sellers, but as you can see, they lost this fight and the market pushed to the downside. Then the buyers took over at the bottom, and slowly the market got to this area. That is why now at this area the market just shot up. From the morning the market was just gradually going up, but at this area the market just shot up. So these are clues that you can look out for when you're trading. These things come with experience, guys, but if you have the strategy, you will know exactly why I'm able to identify these areas. You'll know exactly why. As you can see, we do not use those that many tools. The only indicators that we use is the 50 EMA and the kill zone boxes. If you are in the signals group and you don't have the strategy, if you have the strategy, you'll know exactly why am I able to identify these areas. So today we'll be looking at this. As you can see, the market just pushed from 800 until 697, and we're pushing back up, and it's about 2:30. So in the next hour I'll be sending out the signal, guys. Yeah, that's it. I don't want this video to be too long because most of you won't watch it. Right, what's happening here?